Very good morning, students. So, we had already done this investment decision part, that what is investment decision, and then long term and short term investment decision. So, now we'll start with a new topic, that is factors affecting these capital budgeting or the investment decision. So, the first one is cash flow of the project. So, whenever a company it is investing some funds or the huge funds in an investment proposal, what is its means, you can say its expectations. Its expectation is that there is a regular amount of cash flow so that the daily requirement can be met. So the amount of cash flow an investment proposal must be assessed properly before investing in any of the project. Okay, then the rate of return. So the most important criteria to decide the investment proposal is it rate of return. So the rate of return, how is it calculated? It is calculated on the basis of expected return from the project. Okay, and along with the return we also see the risk attached to it. So if the two projects are there of the same risk, then obviously we are going to choose the project with the higher rate of return. Okay, then investment criteria involved. So there may be many criteria of the investor while investing somewhere, or especially in the long term assets. So along with the return, risk, cash flow, there are other criteria also which help in selecting the investment proposal, like labor, technologies, machinery, etc. Okay, so these were some of the factors which affect the investment decision. Then after investment decision, the second financial decision is financing decision. As you can see here, debt and equity. So in investment, we were deciding that where we have to invest. Okay. Now in financing decision, the decision is related to whether we are going to raise the fund through debt or the equity. Okay. So it is how to finance the activities of the business. So there are different sources like shares, debentures, loan. Okay. So these are the things which constitute the capital of the company. So here in financing decision, we have to choose the best one, whether it has to be shares, debentures, or the loans. Then factors affecting financing decision. So the first one is cost of raising funds. So the capital for a company, it can be raised from the different sources. Okay, and the cost of raising funds may differ. Like for shares, you need to give the dividend. For debentures, you need to give the interest. So that you are going to decide now which is the cheapest source now. Okay, risk. After cost, we are also going to see the risk associated with the share or the debenture, in which we are going to suffer with the more loss. Okay, then flotation cost. Now what is flotation cost? It is a cost of raising funds through equity, debentures, and other sources. Okay, cost of raising funds, that means securities. Okay, so if the cost of flotation cost along with the cost of raising funds, they are lower for a particular source, it is to be selected. Okay, then the cash flow position. So if a company has enough liquidity, it may opt for debt financing. Okay, and debt, it can be paid off when the funds are not needed. And then the fixed cost. Okay, so fixed cost, basically it is divided into two, that is fixed operating cost and fixed financial cost. Okay, so in business, if it has a high fixed operating cost, that means it reduces fixed financing cost. And in fixed financial cost, what happen if the level of fixed operating cost is in excess? It is better to keep the fixed financial cost at their minimum. Okay. Then control. Control consideration means it lies with the equity shareholders basically, and the issue of equity shares to raise the capital, obviously it's going to dilute the control of the existing shareholders. Okay, but financing through debentures or the loans from the bank, it does not have such implications. Then capital market consideration or capital market condition. So the state of the capital market in the country, it also plays an important role here. Okay, so when the prices of shares, they are going up, the people are ready to buy the equity shares. But when there are uncertainties in the stock market, they would prefer debentures. Okay, so these were some of the factors. Then comes dividend decision. So this is the third and the final decision. So here what we have to decide is that the how to dispose the profit or the disposal of profits. Okay, like means after earning the profit, it has to be divided among the shareholders, some interest has to be given in the bank, tax has to be given. So after that, how much we are going to retain, how much we are going to keep with the business, and how much we are going to give to the shareholders, that is dividend decision. Okay, see, disposal of profits. Okay, so this part of the profit, it is retained in the business. The profit which is retained in the business, that is called retained earnings. Okay, and the rest of the profit, that has to be given to or distributed to the shareholders in the form of dividends. Then comes factors affecting dividend decisions. So the first one is amount of earnings. So this is the most important determinant of dividend decision. Okay, it is the earnings of the company during the year into consideration. Generally what happened, the company distribute the higher dividends, and when it distribute the higher dividends, when they are assured that they are going to earn higher profits in the next year. And when they are not assured that they are going to earn the profits, then obviously they are going to keep more retained earnings with them. Okay. Then stability of earning. Stable earnings promotes higher dividend. If they'll be having more dividends, if they'll be having more earnings, then obviously what will happen, the dividends of the shareholders will also increase. Okay, so under the provision of Companies Act, a company, it can distribute dividend out of the past profit as well, after providing for the depreciation. But however, these past earnings or the retained earnings or retained profits, it cannot be distributed as dividends. Okay. Then stability of dividend. So many shareholders, they prefer distribution of dividend every year. Okay, in fact, they prefer a stable dividend policy. They do not like fluctuations in the rate of dividend every year. They want that the dividend rate should be, means every year it should be same. Okay, there shouldn't be more fluctuations in that. Then comes growth opportunities. So a company, it has two sources of additional capital, internal and external. Okay, so retention of earning, whatever they are going to save, that is internal source, which is the cheapest source. Okay, and when the company needs additional capital for the growth and expansion, it will retain more profits and distribute less dividends. So obviously that's going to improve the future profitability of the company. Got it? Then comes cash flow position. So once the rate of dividend, it has been declared by the company, once they have decided that this much rate of dividend they are going to distribute, then what happened, the dividend warrants, it have to be issued to the shareholders within 30 days of the declaration of the dividend at the shareholders meeting. That means now what the company has to do, they must have sufficient cash available with it to pay the dividend. Okay. Then comes shareholders preference. So management of a company, it also has to take into consideration the expectations of the shareholders. Since they are the owners of the company, they are also the owners of the company. So small shareholders, they prefer current income, whereas the big and the wealthy shareholders, they invest in the shares for earning capital gains. So management, it has to consider the expectations of both preference as well as equity shareholders. Okay, so it can retain a portion of profits for getting back into the business and distributing the remaining profits in the form of the dividends. Then next is taxation policy. So this dividend decision, to some extent, it depends on taxation policy as well. So if the tax rate on the dividend, it is higher, it would be better to declare less dividend and vice versa. So out of profit, when we are giving more tax to the government, that time it's better to give less dividend. And when we have to give the less tax, that time we can give the more dividend to the shareholders. Okay. Then stock market reaction. So dividend decision, as I told you, it also has an impact on stock market. So when stock market it is growing, that time we prefer more shares, okay, but otherwise less. So what happened, the declaration of the dividend, it also has an impact on stock market. As increase in dividend, it is taken as a good news, okay, and the price of security rises, whereas decrease, it may have the negative impact. So hence the impact of dividend policy in the share price also affects the dividend decision. Then come access to capital market consideration. So if the share price of a company, it is falling at the stock exchange, it may distribute most of its current earnings among the shareholders to check the fallen price. So the higher dividend declared by a company, it has somehow psychological impact on many shareholders. Then come legal constraints. All the earnings, it cannot be distributed, that's very obvious. Whatever they are going to earn in a company, that is not going to be distributed among the shareholders as the dividends. So under the provision of Companies Act, what happens, the company, it has to provide for the depreciation on assets and create some reserves also, okay. So what happened, this limits the capacity of the company to declare the more dividend. Then the last one is contractual constraints. So in case company, it receives finance in the form of debt, okay, so the debt providers or the loan, it can put a ban on the company to give any dividend. Sometimes they, as a government one, they can put a ban on the government on the company to give some dividend. So several other factors, it may also affect the dividend decision, which can include taxation policy of the government, rates of the dividend declared, nature of the capital structure, etc. So these were some of the factors which affect the dividend decision.